Hey everyone, me Kevin here. Elon Musk just dropped a few bombshells that are not hitting the headlines yet, and in this video I'm going to break those down. But first, yesterday, Tesla reported earnings that smashed expectations, and as usual, Tesla went up and then quickly gave up its gains. Right now, at the time of this recording, it's up about 2%, despite being up almost 6% in after hours yesterday. This comes as many analysts and even the former CEO of Ford came out to complain that Tesla has actually lost money if you remove state regulatory tax credits. And remember how these tax credits work. Tesla receives tax credits because these are like carbon offset credits, carbon emissions. Tesla doesn't have those because they're all electric vehicles. So they sell these credits to companies like GM or other gas-guzzling companies. The problem is those credits, A, won't be around forever, and B, other companies are starting to create their own EV fleets. So you can't really rely on these credits being around forever. As a result, a lot of analysts are coming out bagging on Tesla, saying the company's not even profitable yet. In fact, to kind of make sense of this, let me just go ahead and pull up the sheet so we can see exactly what page people are referring to, and then we know, okay, so this is why people are bagging on Tesla. All right, so I'm gonna pull it up here. This is from their slide deck. I do quickly want to mention that my courses will have the coupon code that's linked down below expire on the evening of the 25th. So if you were thinking about getting my stock analysis program, that's still in development, but most of it is out, the real estate investing course or the other courses, that coupon code does expire on the 25th. Okay, let's take a look at the slide deck here specifically. So we've got $397 million in regulatory credits. And even if we take out those credits, we still have a gross vehicle margin of over 23% at Tesla, which is phenomenal. This is great. Remember, NIO's sitting at like 5-ish% right now. They should be able to push that up to 15 to 18% pretty quickly, though I don't know that they're gonna hit the margins that Tesla has because of Tesla's incredible vertical integration. And remember that NIO uses a more state-run facility. Actually, it is a state-run facility for their manufacturing. They have a 5-year contract. I'm just throwing that in there as a comparison to another EV automotive manufacturer here. But here's what you wanna look at. So when we go to the net GAAP earnings, which GAAP earnings will account for stock-based compensation differently than non-GAAP earnings. And then we'll go over here and see that GAAP earnings are $331 million, which what people are doing, analysts are saying, well, 331 minus 397 equals a loss, that the company is actually losing money. And they're going back and doing that for the other quarters. They're saying, well, if you take this out over here, you lost money. If you take this out over here, you lost money. If you take this out over here, you lost money. If you take this out over here, oh wow, cool, you were barely profitable. But that's what the analysts are doing. This is a way people are bagging on Tesla. Now, and we're gonna get into what Elon Musk just said because it's mind-blowing some of the things he just said. But I mean, they're not wrong. They have a point. But this is actually good for Tesla bulls because it means you continue to have this selling pressure on Tesla, which anytime you have that sort of contrarian selling pressure, it creates, in my opinion, a better buying opportunity. Once you get all the sellers going out and going, yeah, no, Tesla's great, well, then the price goes up and then it becomes more expensive to buy. But bulls might want to consider, and even bears might want to consider some things that Elon Musk just said. So let's hit those. There are 3 main things I'm going to talk about here. Number 1, this one, almost nobody has picked up on. In fact, a lot of these 3 things almost nobody's picked up on, and these are absolutely incredible for Tesla long run. Number 1, folks, what Elon Musk said about insurance. Elon Musk stated that Tesla's insurance division is a startup that will provide risk-based insurance based on the individual rather than based on statistics. But that's not all. He said the insurance division could be worth 30 to 40% of the value of the entire automotive company. That's a really big statement there, and there are a few statements in that, so let's try to unpackage this. So first, insurance is a social good where we spread risk amongst each other. Say 10 of us pay for insurance, we pay for insurance so that if one of us gets in an accident, our premiums all together pay for that. It's kind of like spreading risk amongst society. Insurance in cars is unfortunately pretty low margin. Most insurance companies sell for somewhere around, say they sell $100 in premium, they're only bringing about $5 to $6 to the bottom line. 5 to 6% net margin. Not that great. But instead of using these broad-based statistics where insurance companies will just say, okay, 18-year-olds, you're riskier. 30-year-olds, you're not as risky. Elon believes that and this sounds creepy, but it's true, his interior cameras in the Model 3 and Y and all of the other data that the computers collect on accelerations, speed, the way you drive, and so on and so forth, will determine how safe or somebody is individually, rather than based on some generics like their age or their sex or demographics on location or what. None of that matters. Elon Musk is looking for individual risk-based profiles on the data that they're collecting on you. Kind of weird, but it incentivizes you to be a safer driver because Elon's suggesting, hey, if you prove to be a safer driver, or we think you're a safer driver, you get cheaper insurance rates. That's all cool and all, but with this data, somehow, and I can't wrap my head around this, somehow Elon Musk believes that the insurance division alone at Tesla could be worth 30 to 40% of the value of the automotive company. Now, that was his phrase. Here's the clip.
Insurance could very well be, 30-40% of the value of the car business, frankly.
But unfortunately, Mr. Elon Musk, I have absolutely no idea how you figure that the car insurance division for Tesla could be worth 40% of the automotive division. I mean, even if I pull up a calculator here and I go really generous and I try, it doesn't make sense. Because see, look at this. If we go and say, let's say we have a $40,000 average selling price for a Tesla vehicle in the future, what you take to the bottom line of that is about 27%. So $10,800. You're saying insurance would be worth maybe 40% of that? How are we going to get $4,320 in profits on an insurance division? Well, initially I thought, okay, let's say half of people adopt Tesla insurance. Well, that means we have to have more profit per car. Okay, fine. But then people might have the car for 7 years, right? So it's like this monthly fee that you can get. And then I could divide that by 12. Oh, $100 per month. That seems reasonable. Maybe that's how Elon Musk means the insurance division could be worth 40%. But the problem is insurance has expenses. Most insurance companies are only taking $5 of that to the bottom line. So Elon Musk would have to somehow increase the insurance margin extremely high to get insurance to be this valuable as a part of the company. And so my conclusion is, I kind of think Elon Musk knows a strategy for making this insurance business profitable that just is not clear to us yet. And this is fascinating, and it's something to pay attention to. It's not just a matter of saying, use Tesla insurance because we're cheaper, or hey, it's the same company, or hey, we could give you risk-based pricing. It doesn't matter. There's still going to be accidents. There's still going to be claims that have to be paid. I have absolutely no idea why Elon Musk would say that the insurance division alone could be worth 30 to 40% of the value of the car company. I don't get it. I don't see it, but I'm very, very curious, and I like that. That makes me bullish. Stay tuned. Well, let's keep an eye on this. Now, I don't want to get overly optimistic because I don't think it's realistic, but maybe he knows something that we don't know yet. Now, the second thing Elon Musk said is that autonomy, once it's fully out, the full self-driving, which began rolling out a couple days ago, Elon Musk believes that automotive margins will be actually quite comical right now compared to what they will be in the future. Here's the clip.
In terms of margins, all of these margins are going to look pretty comically small when you factor in autonomy.
This is actually very powerful as well because Elon Musk previously said that he believes he can reach 30% margin per vehicle, and now he's suggesting that those margins might be comical, which currently we can only think of this as a software upgrade that costs around $8,000 for full self-driving, which is great, and that'll absolutely boost margins. Or it'll boost the revenue per car, depending on how we want to set up the spreadsheets. But how Elon believes that today's margin will be comical is also another fascinating tease. Now, my closest guess to this is that Elon has plans for some sort of recurring subscription-based fee here, something that Tesla can just continue to charge forever and ever, rather than forking over $8,000 here. Why don't you just pay a few $100 per month? Maybe it's a little bit more expensive than $8,000 in total because of the time value of money and that it's a payment plan, and boom, Elon Musk pulls out more profit. Or maybe it has to do with the robotaxi network, which Morgan Stanley already believes that Tesla's robotaxi network alone could be worth $120 per share at post-split at Tesla, and we don't even have robotaxis yet. Elon Musk also said that he looks to Airbnb and the Uber models regarding robotaxi. And this might actually give us a hint on why margins could be comical in the future. See, Airbnb and Uber both charge fees for every single use or ride. So it would absolutely make sense for Tesla to collect a fee for every single taxi ride with Tesla. So what's happening here is this. Tesla sells you the car. Tesla services your car. Tesla gives you the insurance for your car, but then also does its own repairs in-house in the event that there's an accident. At least that's the direction they're going. Then, or they just give you a new Tesla. Then they set you up with self-driving by selling you the full self-driving package, either on a monthly basis or an upfront package that you pay for. Then they end up selling you a fee-based app that lets you make money from your Tesla. It's honestly brilliant. Their vertical integration has made it so that they're spending the least amount of money possible, but they're plowing profit opportunities all over the place. It's honestly brilliant. And this comes on top of Elon Musk saying that he believes Tesla's being, quote, absolutely vertically integrated creates the massive moat around Tesla's ability to have max margins and turn insane profits, which other car companies are not doing. Elon Musk says that his machines can't be copied. You can't just pick up an engineering catalog and go, yep, I'll buy one of those machines Elon bought and I'll buy one of those. He made the machine that makes the machine that makes the machine, he says. And that makes Tesla very powerful. Honestly, considering these elements in Tesla's ramping up to a third shift at Tesla Shanghai due to high demand in China, makes Tesla, in my opinion, a very, very solid long buy. Now, one thing the media outlets did pick up on and freak out over a little bit was the fact that Tesla's estimates for 2021 are currently that they'll deliver around 750,000 vehicles, but Elon Musk said you would be right to assume that we might be able to deliver 800,000 to 1 million vehicles in 2021. I actually personally believe this should be a no-brainer. We should be able to get Fremont and Shanghai at full capacity by the end of 2021, which, in my opinion, those two facilities together should be able to produce somewhere between 600,000 at Fremont and 1 million at Shanghai. So somewhere around 1.5 to 1.6 million vehicles, just those two facilities. Well, then in 2022, we're going to have ramped production at Tesla Berlin and the Gigafactory at Austin, which should be able to help push us closer to maybe even 2 million vehicles by the end of 2022, maybe even as high as 2.5 million by either late 2022, sort of on pace for that, or mid-2023. Elon Musk did say that factories take somewhere around 12 to 24 months to fully ramp, though, so that does sort of lower expectations for how quickly we can get vehicles out at Tesla Berlin and Tesla Austin, but still, we should easily be able to hit that 800 to 1 million in 2021, and that's pretty exciting. Now, personally, I'm not buying heavily on individual stocks right now because I think their overall things are a little frothy right now, but I am buying as part of my 1337 portfolio, which down below, you will see the links for that. So if you want to see my top 41 stocks, click that link down below. And remember that a coupon code for the amazing courses down below does expire on the 25th. In the evening on the 25th, so check out those courses as well if you'd like. You get a bundle option when you check out. And folks, thank you so much for being here. We will see you next time.